Hello, clients. Happy March 2025 to you. And as we have gotten into the habit of doing, I just want to give you a little bit of a look back on the previous month, February of 2025, as well as a look ahead and see if we can keep this pace going. We have continued very strongly into the first of the year here and through the first of the quarter. We're going to see if we can keep this going. Quite honestly, what goes up does come down, and it's just a matter of how high it goes, and then we can predict how far it comes down. So, starting with silver here, we've got the current price of 31.72. We did come down and just about close at around 31. We closed at $31.10 for the month of February, and you'll see that was a decline into the close of the month. We were off on a tear. At one point, silver was up 12.2% in 2025. But this February rally was not quite maintained into the close of the month, but at least we've come back to life here a little bit. Gold year to date, real similar chart. So starting here in February, this is from the beginning of the year. Gold did see an all-time high put in of 2,955, and again closing weekly into the month, gave away some of those gains. Gold ended up plus 1.6%, whereas the white metals faded. So silver for the month of February finished down 1.1%, but gold still stayed positive, and we remain positive. It also was up 12.2% at one point after hitting that all-time high in 2025, and now it's up 8.3% compared to silver's 7.5%. Platinum, on the other hand, had a nice little rally, but not to be sustained. It keeps giving us a little bit of a tease. It finished down 4.3% in February. You'll see our close here is lower than the high, but we've rallied back up again in that metal as well, and has us positive for the year by about 3.6%. Nothing to be real excited about, but at least it's stable, it's strong. This sideways chop in platinum is something that's continued for many years, quite honestly. Palladium, on the other hand, remains in a bear market, even though we are currently up so far in the year about 0.4%, so less than 1%. We had a real choppy February, mostly a decline closing into the end of the year. It went down 9.3% in February, and again, up just about 0.4% on the year. Gold, look at this chart, just zooming out on the 12-month chart, up 40% in 1 year. Again, after hitting that all-time high, we were up about 43%, and we've given some of that back. Where do we think that it can come back to, right? So let's assume that that 2,955 might have been the high for this cycle. Then we can put in some Fibonacci retracement levels. This just is a technical analysis. It doesn't take into account timing or scope of a correction. It doesn't take into account fundamentals, and it certainly doesn't take into account policy that can move or news that can move the markets. But 2008-16, we did come down to about 2008-58, so a little bit lower than this. We didn't quite make it to the 382 Fibonacci retracement level, which is 2008-16. That level's lining up with the 50-day moving average, which we have separated far above. So somewhere in that 2,825 range is something that would be healthy, but we have actually reversed and climbing back up over 2,900. Silver on the 1-year chart, still also very bullish. So there's no interruption in the bull market in silver. It's up 38% in 1 year. The last 12 months, just barely behind gold. And we'll keep it going as long as we can. But quite honestly, I think that March is going to be a little bit of a flat to down month for silver, and I'll get into why. If silver does pull back, where does it come down to? All right, so we hit $33.38 as the cycle high here recently this year. And we did blow through the 382 Fibonacci and came right down to the 50% retracement level, and then down to the 618 Fibonacci retracement level. So we came right down to that $31 level just below, and now we've since bounced up off of that. So we'll see if the floor here is that 618 right around $31, and we can continue to rally there. What has happened to the gold silver ratio? This stretches out over the last 40 years. So if we look at the more recent 4-year period of time, you'll see just this little chop here, not enough separation, not enough of a range for us to have really any significant ratio trades unless you just really got in at the low and can get out at the high on one of the metals. But that's very, very few clients. And so, continue to wait to hear from us when there's an indicated ratio move. Why is gold going up? Well, we'll get into a bunch of fundamentals, but it almost always is this counter trend or this non-correlation to the US dollar index. So the weaker the dollar, the stronger gold price tends to be. And so you'll see from that high of just about 110 on the dollar index to start the year after the post-election rally in the dollar index, we've had this slow, steady decline. The president likes that. He wants a weaker dollar. He'll do whatever it takes to try to weaken the dollar due to the exporting and manufacturing advantages that provides. So we're also watching the Dow to gold ratio. So if you take the Dow Jones Industrial Average and divide that figure by the gold price, we're actually now into the 14s for the first time since before the pandemic. And that's a real exciting number. Really, you'll know when gold starts to get overvalued when you get down into these low territories of single digits where the equities markets might be the best value. But for now, gold is the best value and you let it ride, and we'll have our eyes on that. But the Dow gold ratio is a fun one to watch. So what are the current fundamentals? Bond yields are declining, which means the bond market has been strong. Okay, and that's actually good for gold. The US dollar index declining, good for gold. Growth slowing and inflation slowing, depending on the uncertainty, the fear, the volatility, that can be good for gold. It's one of the better underlying makeups, honestly, for gold, but not for the white metals. That actually is not a great setup for silver, platinum, and palladium. And I'm going to get into a little image here that will show you kind of what I'm looking at and what I'm watching. Tariffs and trade wars certainly causing uncertainty in the equities markets, but also the global markets. Those equity market downturns are significant right now, and that's given some wind in the sail of gold, unless there was to be an outright crash in a very short period of time, which would pull the metals down with it. Global physical gold demand continues to spike, so a lot of news and concern about physical metals, everything from us monetizing ours to revaluing gold to obviously auditing Fort Knox and the Fed and all those things. And then a lot of gold moving from Europe into the United States has ramped up demand further. It has driven up premiums domestically, and it's caused concerns about liquidity. Geopolitical tensions continue to ramp up again now, obviously with the Russian-Ukraine and those peace talks stalling. And then you've got Israel and Gaza's ceasefire on the ropes as well. Debt and deficits increasing, right? Washington's not slowing its spending enough to decrease the deficit or decrease the debts, but they are trying to rein it in, and we'll see if we have a government shutdown. Cryptocurrency is also falling. So I said I'd show you an image. We subscribe and partner with Hedgeye Risk Management, and they divide the economy and inflation into 4 quads. And this is really interesting because anything north is growth increasing, you'll see here, and anything moving east is inflation increasing. And so when you get into one of these 4 quads, and the further out you get into them, the more aggressive that quad is. Well, quad 1 is growth accelerating and inflation slowing. Quad 2 is growth accelerating and inflation accelerating, right? Quad 3 here is growth slowing, so GDP is dropping, but inflation is still accelerating. And then finally, quad 4 is growth is slowing and inflation is slowing. And they are expert analysts, and they say that in February we were in a quad 4, especially towards the end of the month, and that we're in a March quad 4 too. So growth slowing, inflation slowing, and that kind of goes to why I was saying that I think the white metals may have some weakness here, but that actually is a quad where gold actually does pretty well. So that is it for your February recap. As always, please reach out to us. You can call us at 866-211-8972. You can email me at Tori@McIlvaney. Deanna, Eric, and I are always here to help you out, catch you up to speed, and review your own individual portfolio. As always, thank you for watching.